Hey guys, this is Tom Sullivan here with Real Talk Investing, and today we're going to be taking a look at a stock that I love and think that it has an exponential growth that could be happening over the next year to 5 years as we look in specifically the mortgage and real estate market. And that company that I'm talking about has helped revitalize and change the way we look at doing mortgages. And for mortgages, I'm talking about real estate, buying houses, and being able to go from a down payment and getting the purchase of your house closed out. So the process has been very drawn out for a long time, taking months upon months upon months between offering for the house and then finally closing on the house. But this company has been able to help speed up that process, and I think long term will make it very, very easy, make it be a couple of button presses on a phone, couple of calls, and that process will be done. And that company is Rocket Companies. So Rocket Companies has under it Rocket Mortgage, which is seen all over the place. You see advertisements everywhere. This company is continuing to see growth, and I think long term will be extremely successful. But as we talk through the company, I want to share some more details on it and why I am so bullish on the outcome of this company's stock. And now this quote right here really sums up this company. And the quote is, "Numbers and money follow, they do not lead." And what that's truly saying for this company is leading with innovation and making changes to the norm in order to be successful and take a larger market share when it comes to the mortgage industry. But by doing that, they're having to have additional expenses. So while other companies are cutting corners and trying to cut expenses so they look better on spreadsheets, this company is taking advantage of that and trying to get a bigger share of the market by advertising. And you'll see them throughout all sports games, all commercials. They are all over the place. And they're doing this to help gain that market share. So it will not help on the spreadsheets at the moment. However, long term, this is going to be a huge play for them and a huge win. So as can be seen from this company introduction that's right with the Rocket Company's website, they are extremely consistent at being good at what they do. 7 consecutive years for being primary mortgage servicing winners, 11 consecutive years for the primary mortgage origination. So this company has it locked down when it comes to mortgages. They know what to do and how to do it and have successfully shown it for year after year after year. And as a result of this, they are going to continue to build business, continue to build those strong relationships with customers so that customers are coming back and that they're talking to their friends, their family, and recommending this company as well as an effective way to get a quick sale and quick closing on properties. And now pulling some of this data that you see from Simply Wall Street, it shows you the different upsides and downsides that we have to keep in mind with this company. So some of the upsides is right now from an estimation of what they believe the fair value of this company is, it's trading at about 13% lower than that estimated value. And what we have seen from earnings in this past year, we have seen a 15% increase. So they are continuing to get money coming in, they're continuing to spend to grow advertisement, and they're seen as trading below value, which this right here is a setup for success. However, some things that are seen as a risk for the company is they are forecasting that those earnings are going to decline by about 27% per year for the next 3 years. So you might be asking, why are they seeing such a decline over the next 3 years when this past year they've grown by about 15%? And a lot of it has to do with the shutdowns that we've seen recently in this past year. With all the shutdowns, there was all this built-up need for the housing market to reopen. And once it finally did reopen, the mortgages went like crazy. So people were buying houses, people were getting mortgages, and this caused a huge increase in the revenue and a huge increase in the number of mortgages that were closed. So as a result of this, their numbers greatly increased, which what the analysts are saying, who are more on the bear side and don't see this growing, are seeing that this company will not be able to maintain the rate that they saw in 2020 due to that huge influx of individuals purchasing houses. So they're saying that those numbers are now going to continue to dwindle as a lot of people bought houses in 2020. There won't be as many in 2021, 2022, 2023. So the one thing that will be watched there very closely is I personally believe that there is still a lot of opportunity for individuals still looking to buy houses. And while it may not be as high as it was this past year, I think from the advertising that the company has done and how well they've been able to push their brand, I think that will continue to maintain a strong hold on the number of mortgages closed, and that will help them keep their earnings up. So while it may not be as high as it was in 2020, I certainly don't see it dropping 27% year after year. Now, talking more about this company from an investor standpoint, some of the key metrics is that through 3 quarters year to date for 2020, so as we're still waiting to see that Q4 numbers come out, we're seeing that there was $213 billion in mortgage originations with $11 billion in total revenue seen so far through this year. And where does that put us in terms of the industry as a whole from the retention rate? And what we're seeing with the Rocket Mortgage is that they're seeing a 4.6% average refinance retention rate, which is extremely strong. And they're able to help drive these numbers and keep people inside their brand through their strong team. So they have a very large team, 22,000 people that are able to therefore effectively hold conversations with people, make sure that they're being any issues that they have are being addressed on time, and that they're always able to reach a person when needed, as opposed to being stuck behind a phone for long periods of time. This is very important. This builds that customer service that is needed, which then therefore helps to build the relationships that they have, which makes people want to recommend them to others. So over time, this will help them to continue to build and grow their market share. All right, so let's get down to this latest share price. So right now, the shares are sitting at $19.61. However, we have seen this bouncing between $19 and about $21 for the past several months. Now, going back to the initial IPO when this stock first came onto the market, right after the first couple months, hitting in September, we saw this stock take off, and it went up to approximately $30. At that point, it looked like it was taking off like a rocket. However, it quickly came right back down to earth and has been bouncing in this $19 to $21 range for quite some time. However, what I think is going to be a very big deciding factor on what happens next with this stock is how the next couple of earnings go. If the next couple of earnings can show positive or show above that, say, 27% downside that they were expecting, I believe this stock will have plenty of room to grow. The company overall has to prove that it's able to maintain its clientele and maintain its strong revenue, even without the pandemic being able to show as much of a push as it did in 2020. So long term, they're going to have to make some adjustments, which they certainly already have through their advertisement, to continue to grow their market share, and then from there be able to continue to get mortgages, continue to get refinances, to then grow their revenue and overall increase their market cap, potentially doubling it to say up to $80 billion as a first spot to hit, first milestone, and then from there continuing to push higher. I think the stock has plenty of room to grow, but it's just got to prove itself to the market over the next couple of earnings. So in summary, just to go over some of the information that was given through Simply Wall Street, the current forecast for annual earnings is expected to go down at 27% over the next 1 to 3 years. And if this trend happens, we will expect the stock to stay stagnant in that $19 to $21 range, potentially even dropping a little bit. However, if this stock can prove that it can hold on to its revenue, hold on to its market share, and even grow it through their advertising streams, I expect this stock to start to take off like it did earlier this year as it approached $30. So in summary, I think that Rocket Companies is set up for success as we move into 2021. They have a lot of criticism that they've received from a lot of different analysts, but they have nothing but upside if they're able to continue on the path that they've currently been on. And that's through continuing their advertising streams to open up market share, continue to push customer service so that they're able to effectively provide mortgages and refinances, and then from there, continuing to try to beat the industry standards. So right now it's showing 27% downside for this company with the industry down about 5%. I certainly think that Rocket Companies, with the work that they've done, will be able to at least meet industry standard, if not surpass it. And if they're able to do that, we will certainly see the stock grow as we move through 2021 and going forward. So thank you all for taking the time to watch this video on my thoughts for Rocket Companies and where I see it going over the next couple of years. As you've seen, it's been sitting between that $19 to $21 range for quite some time. But I believe if this company continues to do the work that it's been doing, continuing their strong advertising, continue to grow their market share and provide the customer service that they have been, I do not see anything but upside for this company and expect it to hit $30 to $40, hopefully in the next few years. But with that, I would love to hear all of your thoughts where you see Rocket Companies going. So please leave a comment below. And if you like this video, please throw it a like and subscribe to the channel as I continue to put out these videos. And look forward to seeing you next time.